The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 19th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, you can always send me an email. Let those fingers do the walking. Steve@TFNN.com. Just inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Tariff Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded down 335 points. She's trading out at 24,652. S&P is off 18 points, 27.54 is the print. NASDAQ 100 down nearly 1%, 71.86 is what it's trading, 65 points to the downside. Russell 2000, nary a pullback out there, off $5. Semis are down 26 bucks. That's nearly 2%. Same with the transports, 207 points to the downside. Spot volatility index, you know the game. You know the game. It's trading up 14% as we speak right now. It doesn't matter what that percentage is at 1 o'clock in the afternoon. It does matter what that percentage is come when the toll bells. The bell tolls, something along that. How about the market close? Simply at 4 o'clock. If you're over 10%, you know the trading tactics, don't you? Yes, you do. Gold is back $1.40. Silver off 10 cents. Light sweet crude off $1. Treasuries are to the upside, leading the charge the upside big time. It is Sarepta Therapeutics trading out at $144. It's up $38 or 36%. Foundation Medicine up 28% or $30. Solid Biosciences up 56%, $16. There's some movement there. Netflix up 8. Regeneron up 6. To the downside, Google off about 1.5%, 16 buckaroonies. Tesla off 16 bucks or 4.5%. Boeing down 13 bucks, 4%. Booking Holdings off about 13 bucks. So, of course, we have things to look at. I, though, want to look at what you want to look at. So there were two questions that came in. I'm going to go ahead and pile these together because they really coincide. One was from Larry C. in Detroit, and Larry wanted to know what would be the entry points. He asked about the max pain, which would be a different calculation. Then we'd be taking a look at options expiration. But he was asking, basically, where are the entry points in the SPYs, the Qs, the diamonds, and the IWM? Larry's not asking for much, is he? And then Michael P. went on to say, hey, what's the entry point in the Russell 2000, the 3X, the TNA out there? Because today, last week, there was a caller. And I told the caller, hold off before you fire away at the TNA. Wait till the ES mini gets to 27.39 and the Dow equity futures contract YM gets to 25,001. So he's wondering, are we here right now? So in order to answer those questions, what I really need to do is a thorough analysis of the markets and what it is that you and I can anticipate. So the first thing that we must anticipate is, where is that rate of change going to be at the end of the day on the spot volatility index? Right now, it's above 10%. If we take a look at the VIX itself in comparison to where it's trading with relation to its forward-looking futures contracts, we're trading at 1407. Furthest out futures contract takes us into March of 2019. That's at 1702. Things really don't look too cockeyed here. So it looks okay. If the spot volatility index was well above, we'll call it 17 bucks, 1680, then that would be actually kind of one of those major bottoming signals. We don't have that. What we do have is right now one-day rate of change greater than 10%. That says anticipate a bounce or bottom within the next 24 hours, assuming that this is how the market closes. May not close like this. If we take a look at where the spot volatility index is trading in relationship to its 50-day exponential moving average, that is the yellow line on the bottom panel of our chart. That is at 1441. That's the 50-day. We're trading at 1404. So we're still trading below it. When you trade below that, it is bullish. It is a bullish indicator for the market. If you trade above that, and here's where you get a little bit sideways. Let's say we close above that today, and you've got a 10-day rate, one day rate of change greater than 10%. You know what I was trying to say out there. Then it becomes kind of iffy as to which direction is the market communicating to us. Okay, so what are we going to leave with as we leave these charts? It's really important to pay attention to that one-day rate of change greater than 10%. Why? This is the reason why. You go take a look at all of the blue arrows on this chart out here, and you can take a look at what took place the next day. Many people will think the sky is falling, with the Dow being down 335. Maybe it's 435 or 535 by the end of the day. But that one-day rate of change says, don't fall for that kind of gimmick out there, because that's all that it is. It would be a gimmick, and I don't want you to fall for it. Doesn't mean that it works, that this tool, this system works 100% of the time. But it's not like it's a coin toss. It's not like it's a 60-40 proposition. It's not a 70-30 proposition. It's more like an 80-90, 20-10 proposition out there, and maybe even better than that. So that's why we're going to pay attention to what that end of day, one day, I don't mean to belabor the point, but I must answer the question for Larry and Michael out there, and that's one of the factors that must go into your decision. It could just be a bounce out there, guys. Could just be a bounce. Now, what was also mentioned were some profile levels that I had given last week. Those profile levels, well, let me go find them as I bounce around here. I had given the profile levels, here they are, on a daily time frame. In the ES Mini, if you look at the very left-hand panel of my screen, you'll see the number was 2739. That is the exact number that was quoted by Michael. And yes, price got down there, tested it. So far, it has rejected it. So support is held. We didn't talk about the NQ because we didn't have the NQ bottom of its box at that time frame, because that just formed today. And what's the bottom of that box? 7168. That level has held. All that the market has done regarding the ES and the NQ is pull back to a level of support. Inside the Dow, that's the wild card, guys. It's the wild card because you can see we're trading well below the bottom of that box, which was 25,001. Yesterday, we closed right on it. Today, we're trading below it. Inside the Russell 2000, it has rejected support, the top of its daily box. So that means we come back from this break, we have to evaluate the Dow equity futures contract. Everything else has held support. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Dow's off 3:30. If you didn't catch the first segment of the show, here's what we have established so far. We have some requests out there to take a look at where would you go ahead and think that you could put in order to go along the indices, whether it's the diamonds, the SPYs, the Qs, or the IWM. What we established out here, and take a look at the equity futures contracts, is that the ES-Mini for the S&P 500, the NQ for the NASDAQ 100, and the Russell 2000 have each tested levels of support and have bounced off them. In the case of the Dow, it has failed to bounce off its equivalent level of support that we took a look at for those three equity futures contracts. That then says, okay, the puzzle, right, the Rubik's Cube puzzle is we got to go figure out about the health of the Dow equity futures contracts. We're not going to go look at the DIA, the diamonds, that trades for 6.5 hours, basically, and use 6.5 hours worth of information to make our decision. We're just not going to do it. Instead, we're going to look for a vehicle that trades nearly round the clock out there to give us price discovery in order to be able to identify patterns that are reliable that you and I can't count on. And therefore, what we're going to do is we're going to put up the Dow Equity Futures contracts. This right now is the 5-hour time frame chart out there. You've heard of the 5-hour energy drink. Well, this is sponsored by the 5-hour energy drink, where you and I can go identify reliable tops and bottoms. You'll see those black diagonal lines. Just focus on the two bottoms at this stage here. The one from April the 3rd or 4th. You'll see that. That's in the left-hand side. The one from May the 3rd, and when that pattern, that's a Rhodes momentum indicator pattern and signal. How did they work to identify a buyable bottom pattern? PDG. Pretty darn good. So where are we now? We can see we don't have that pattern at the moment. But guys, Michael, Larry, since the Dow on its daily chart has broken through support, we've got to wait for this pattern to form. I can't guarantee that it's going to form, but it likely is going to form. We're likely going to see a push lower than the lows that we've already seen this morning. You can see we're in wave number 6. We were very close to getting down there, so it's very possible we'll get to that wave number 7. I think very likely we'll get to wave number 7, very possibly at that time, which may not be between now and 4 o'clock, by the way. These are 5-hour bars that we are taking a look at, and this is going to need a little bit of time. I saw somebody wrote a statement in the den that that bottoms are a forming process or something like that. It's not a one single event. Well, the one single event would be that it generates this Rhodes momentum indicator, but even that requires the formation, and we're just not there just yet. So we'll know if in fact this bottom forms. Now, if this bottom forms, yeah, it's an absolute buyable event out there. Tariff, schmariff, doesn't really matter out here. Why? Well, first, that would be the then second highest low of that Rhodes momentum indicator signal. As you look at this 5-hour chart for the Dow, as weak as it is, the one thing that this shows you that it has at the present time is a series of higher lows. Even the bottom that formed out here on May 29th was a higher low, and we can see higher highs out here. So guys, we just simply have to wait. We have to be patient for this pattern to form. And it's probably just going to form inside of the Dow. It is not going to form, or likely not going to form, inside of the NQ out here. If we take a look at the NQ, this one is just a picture of beauty with regard to those Rhodes momentum indicator signals out here at calling tops and bottoms for the entire year of 2018. You can see it called this most recent top out here. But at this stage, it really hasn't pushed down that much. I don't think that one of these patterns is going to form here. It'll likely be inside of the Dow. So we just have to wait for that to occur, and then we'll go ahead and take a look at what else might be going on inside the market. So yes, we hit those levels of support. Maybe those were the buying opportunities. I would say what you'd like to see out here, you'd just like to go ahead and get some type of confirmation from the weak link, and right now that happens to be the Dow equity futures contract. You will not get the signal. I promise you. I guarantee you. You can stare at the DIA all you want. The signal is not going to come from there. It's going to come from here if it comes at all. So hopefully that helps you out. We had a request to go take a look at soybean contract, to take a look at the November contract. Soybeans just getting trashed earlier in the day, but they have had a rebound, quite a rebound off of the bottom. That came down at the 10 o'clock time frame. I guess it's because of this whole tariff thing, but maybe somebody was figuring out that if you were a Canadian company out here, you could buy soybeans and ship them to China, or maybe Mexico, or maybe some other country. And people were looking at it as a really good buying opportunity. As we take a look at the soybean contract out here, you can see it was a true spike low on a 30-minute basis. The nice positive thing that you have here is you're trading over the top of a market profile. On a 240, I don't know if you want to go to 240, you want to go to 60. Let's just change the time frame here. Let's go from 30 to 60, kind of see where we're at. There you go, Z. Put a bottoming as a process, just like the Rhodes momentum indicator versus a single event. Although I have a 5-step, so I guess you can't call that a single event process that forms that bottom out here. If we take a look at a 60-minute profile for the soybean contract, you can see you're trading above the top of the box just slightly. So that's a left-hand panel chart that you're looking at. That looks good. On a 240-minute hour, what do you mean, 240-minute chart, it looks like a nice big old hammer candle that is formed. That's good. It looks like the daily may have the opportunity to set up a hammer candle as long as soybeans continue to move higher out there. That was a 60-minute time frame chart, 120. So, Ruby, are you in it? Have you already gotten in? You're looking to get in? What was the, at this stage here, what would be the next thing you would anticipate? A move up into the 919.60, the top of the, or the bottom, I should say, of the 240-minute time frame out there. So that's what this looks like. Is there anything else that you need out here? While you're looking at that, just I don't know what else it is that I can provide you with. But if there's something, just go ahead and let me know. Okay, you're good. That's perfect. What else? Oh, we had a request that came in from John in Sarasota. Let's go back and take a look at that. John says, DEM, hang on or let it go. So let's go take a look at what is DEM. That stands for Wisdom Tree Emerging Markets High Dividend Fund. Does not look good. I think you have to hang. You got to hang tight here. Now, I'm just going to go ahead. I'm going to use the only thing that I can right now that I can see to provide you with that information. And that is the monthly TAS market profile. As we go ahead and we open this chart up, what you're going to see, and the month is not over, but the reason I would say hang, if you've hung on this long, I would say continue to hang as long as price closes over 42.94. The actual low has been 42.88. So you've tested it, or price has tested it. It's rejected it at this stage of the game. If it closes below that, probably the, well, how did you phrase it? Let it go. Let it go. I think that would be the deal. But right now, just hang on for a tad longer. That's the Wisdom Tree Emerging Markets. Gave you the emerge off the bottom of its
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we got an email here from the individual who called last week with regard to the entry into the TNA, and that was Earl. And Earl said he bought the TNA at 87 when the SP cash went under 274. Again, take a look at the 2739 level inside of the ES Mini, and he says, hey, it's been a good buy so far. Yeah, but keep that stop very tight for the reasons. Now, I don't know when the email came in compared to when I was talking about it. Yes, some levels of support have held, but we've got one that has failed, which is inside the Dow, and I don't want you to kind of out-trick yourself. You've got to anticipate that the Russell's going to be pulling back here a little bit. And the reason it's going to pull back right now, or should pull back right now, is because on the 30-minute time frame chart, Earl, its price oscillator, as we were speaking earlier, was right at the zero level. And so what typically occurs out here is we typically see a test of Stevie's red line, currently on the futures contract, 1687. And price at 1691. Not a huge pullback, but either the red line's going to continue rising, the price is going to continue lower, some combination thereof. And what you don't really want to see is you don't want to see price get underneath Stevie's red line. So you have at least a counter trend rally. You see the type of top that it formed up here, Earl, the same type of tops in essence that we looked at inside the NQ and the Dow Equity Futures contract on the 5-hour time frame. Hey, no doubt 5-hour trumps a 30-minute chart out here, but this is like right now. This is like I am the announcer and the football game's going on. I'm giving you the play-by-play. 5-hour chart. It's much long. Not much. It is it's 10 times longer than a 30-minute chart out there. So yeah, it's much longer with regard to what's going on at this stage here. You just have a bit of a counter trend rally possibly. Okay, so just be careful. Just in fact, what I would do is for the day, I would put your stop at break even. If we've bounced off support, so be it. If you get a little bit of pullback here and just test Stevie's red line and keeps going higher, then okay. But I really think that what's likely to occur out here, and it's hard. I mean, I can imagine it. It's hard to imagine that we won't see the rest of the markets pull back as the Dow goes ahead and makes that lower low, that punch to give that potential bottoming signal and pattern. No idea whether it's going to come to fruition or not. That the other markets aren't going to pull back as well. So just be careful out there. You may have a good entry, but what we don't have, what's missing, is the continuity. When you and I were speaking last week, we don't have that continuity, especially with the Dow breaking through that level of support. So I just want to try to make sure that. So thanks for writing in, and best of luck with whatever decision it is that you make. I just want to be clear with regard to what at least I am looking at out there. Okay, let's see. Do we have any other requests out here? Yeah, we've got Jeff. Jeff says, what's your opinion on Marriott hotels? Thinking of going long. I don't really care to stay at a Marriott. Do you? I'm just kidding you. Marriott, hey, what's wrong with a Marriott hotel? Well, let's go find out what's going on with their stock. Yeah, Jeff could care less whether I stay at a Marriott or not. Let's go take a look. Ticker symbol's MAR. And let's put up that on my other system out here, MAR. Currently trading 136 and change. And Jeff is looking to go long. Jeff is from Tampa out here. So as we look at Marriott, and let's just take a look at the daily time frame chart out here, see what it is that we see. We do see a series of higher lows, so that's a beautiful thing. The series that I'm referring to, the World Series, beginning here on April the 10th, then you get a higher low on May 3rd, a higher low on May 29th, and today, so far, a higher low. Price is kind of in between the top and the bottom of a neutral profile. So price may get down and tag the 135.50 level. Now, the last time that price was in this area was back on May 29th. There were 2 million shares. Today, you're back on 567,000 shares. So, Jeff, what this is telling us is that there aren't really a whole lot of sellers of the Marriott stock right now as it's pulling back to where it previously did. The time before that, at the swing point low, had 2.4 million shares. So doesn't seem to be a fire sale that is going on. Does not mean that price can't get down to 134.60. If you're looking to go long, that would be one spot to consider. If we take a look at the weekly time frame chart out here, it's just been a sideways move. It's been a sideways move ever since the high. That'll key reversal weekly session on January 29th out here. So the Marriott Hotels is is really on a weekly basis, I don't know, maybe it's acting a little bit like the Dow, really like the Dow, which is still in a consolidation mode. Consolidation's difficult to trade. You want to sell the top, you want to buy the bottom. Where are we in the case of Marriott? You're right in the center here. So we want to be able to get, or you'd like to be able to get the market correct first direction. I'm not saying it has to be the Dow, but that wouldn't hurt for it to be the Dow right now. The Dow, the S&P, and so forth, in order to take a long position inside of Marriott. So your entry point inside of Marriott would either be the bottom or center of the weekly profile, bullish structured profile, says support ought to hold 130.53. That would be a spot. 133.66, that would be a spot, and 134.60, the bottom of the daily profile out there. So I hope that that helps you. Right now, kind of dead money as it trades inside this range between 130 and 144 out there because of just simply all that sideways movement. So that's my opinion on what traders are telling you about Marriott hotels out there. No other questions. I love the questions. You got to keep firing away. You do that, it just makes the show go much easier. Plus, you end up providing listeners and viewers with information that they wanted to ask about, or at least maybe it provides you with a set of tools that Stevie uses in order to go ahead and be able to assess the markets, all of which are a set of tools that you too can use out there. So I think we've covered everything. Maybe somebody write in the next minute or so as we're going into break. In the meantime, what else are we going to be paying attention to out here? What else is that could set a bottom? One of the things that could set a bottom, so this is kind of interesting, is that the New York Stock Exchange, that's the index you and I are looking at right now, as it's moved lower, panel number 2, the interesting thing is that it's making a higher low right now with regard to its advanced decline volume oscillator. That's a mouthful. That's why I said it slowly. But it's making a higher low as price was making a lower low, a.k.a. a divergence. Now, as you take a look at this chart here, the bottoming process is both the advanced decline will make a higher low, as will the volume indicator. So we only have one of the two in place. It doesn't always work like that, but those are the easier bottoms to call when you have that kind of divergence. But for those of you that are volume aficionados, well, inside the New York Stock Exchange at 1:38 in the afternoon, you do have a diverging pattern with regard to its volume oscillation. When was the last time we had that? Well, that actually took place, when was the last time we had the volume? Looks like you got to go back to the March 23rd to the April 2nd bottom out here inside the New York Stock Exchange. Right now, the Dow is off 345, S&P 20. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So one of our wingmen in the den, Mr. Z, was pointing out, and I apologize, I did not get that private message. Must have been out running an errand. That on the 2-hour time frame chart for the ES Mini out here, that when it made it slow earlier this morning, it did so as it was singing in the Stevie Wonder key of G out there. You'll see the letter G. That is wave number 7. That was taking place at 4 a.m. this morning. It is wild how that works, as he put in there. I mean, just truly wild how that works. You want to pay attention to your P's and Q's, or really just simply your G's out there. Now, but here's the deal. The move that it has had off of that bottom has now run into resistance. The resistance being the top of its TAS market profile, 2762.45. So that's present here. Let me change the time frame. Whoops, let me change the time frame on this data series. Let's change this to 5 hours or 300 minutes. It'll take just a moment. We want to see if it's close to Stevie's red line. Still has longer to go. So it's uncertain to me whether. So the question is, was at a bottom? I know you're looking to potentially go short, but not until you see it close under 27.45 or 27.59. On a bounce, let's say price is able to get above the resistance level of that 120-minute time frame. The reason why I'm looking for Stevie's red line and price to catch up to each other is because that price oscillator got below 0, and we didn't really have that test just yet. I don't know which of the two or the combination of the two, one moving lower, Stevie's red line, price moving higher. But that, too, would be another signal, potential signal for you, because if you take a look at this 5-hour chart, you take a look at that Rhodes momentum indicator topping signal that it generated, you'll see that Stevie's red line has acted as resistance. It's a beautiful thing out here. Why it works is just like electricity. It just works. That's the beautiful thing out here. So it might be something to think about. No telling whether or not price is really going to be able to take out the top of that 120-minute profile, 27.62. Plus, on a 5-hour time frame, and maybe that didn't show up on the box clearly there, you can see that at 27.64, that also is resistance, the bottom of that market profile out here. So, yeah, just passing along some useful information. Let's go check, see if anybody else is requesting any information whatsoever. The answer apparently is no. So I'm just going to have to cruise around, see what it is that I see out here that is worth sharing with you, because I only want to give you good information. So what would that be? Well, let's go take a look at some things that are moving and grooving. Let's go take a look at Tesla. Let's go see what's going on with Tesla out here. It's burning fire Fire is not the word that Tesla wants to use. Let's put on the other charts out here for Tesla. See if there's any kind of topping patterns, resistance levels that it might be running into. The monthly chart's going to pop up on our screen first. That's not what we want to look at. Let's go look at the daily time frame chart out here for Tesla. See what it was doing. Basically yesterday makes that Tom DeMark setup 9 count out there. When that trades into bars 5 and 6 and it traded into bars 5, it's usually an indication that things are going to slow down, move sideways, which is what it's doing today. Tesla still looks bullish. Tesla still, let me restate that. Tesla's stock on a daily basis still is bullish. It will remain bullish as long as price stays over Stevie's red line, 339.34 or 353.25. This doesn't forecast what price is going to do next, just tells you what is the condition of this individual equity or the market or whatever we look at. Now, there's a pretty good indication because the price oscillator inside of Tesla got to that zero line right around June 8th, June 9th, yeah, that we will see price and Stevie's red line catch up to each other and give you its next signal. The close below says more retracement, not bear market, more retracement. A test and rejection says, okay, I'm ready to go higher. But you got that TD setup 9 count yesterday, traded in bar 5 or 6 out there. It's doing what it's supposed to be doing. By the way, the last time that Tesla formed a high out here, coming back to February 28th, you talk about singing in the key of G. We've got to put on the old Gordie Howe number 9 because that's what it did, although it's Tom DeMark, but I'd rather just call it a Gordie Howe. We got to come up with a name for it. Basil has such great names for some of those patterns. You got to love his hat trick. His hat trick. I mean, that's that I should be able to use that one. I'd have to pay him such a commission and such a royalty. I can't use it. But we got a number 9. We gotta come up with something for that. We're gonna just call it Gordie Howe right now, and that's what it did when it topped most recently on February 28th. So Tesla at this stage here probably going to pull back and test Stevie's red line at 339.29 on a weekly time frame. Let's go see what it's doing on a weekly time frame out here, because just about everybody wants to crush these guys, and traded right into resistance out here. Right into resistance, a little shooting star on a weekly basis back on February 12th. So now, if you look at the weekly time frame, notice that it's weekly price oscillator getting right up to 0. So the weekly says, yeah, it's ready for a pullback. So it's ready for a pullback to go test Stevie's red line out there, or move sideways, let my red line move up to it. But that's probably the end of the run for a while inside of Tesla, based on what we just looked at on the daily and the weekly time frame chart. Let's go see what else is moving in the markets out here to the downside. Yeah, let's look at the downside action. Google, Boeing. BA. Let's go look at Boeing, since that is the leader in the Dow from a weighting standpoint. So what is Boeing doing? Here's the weekly chart. Now, Boeing has put in one of those Stevie Rhodes momentum indicator tops. It did that last week in one full swoop. Did that by forming that bearish reversal candle. Did that by closing below Stevie's red line. And this now says that Boeing is on its way back. This is a weekly time frame chart we're looking at, but that's okay. 335.34, you're at 342.21 right now. So that's going to keep some pressure inside of the Dow, with this being the number 1 weighted. It's giving you that topping signal. Now, the topping signal just means a price likely to go down to support. And support happens to be the hammer candle from a weekly basis, which is also very near the bottom of its TAS market profile. That was the hammer on May the 4th out there. 317.21-ish is likely where Boeing is headed to. That's what the weekly time frame chart is communicating to you and I. How about the daily? The daily time frame chart, see if there's any other information out here. It's below support. It's taking on a previous gap to the upside. So, yeah, I say it's pulling back in that May time frame, and that is what Boeing is communicating to both you and I. Let's go take a look at Google, see what Google is doing. That also pulling back out here. As we take a look at its daily time frame chart, you get a blank screen. That's because Stevie did not type in the right symbol. Now we typed it in, and this chart on Google looks uber. Can I use Uber and Google at the same time? But it looks uber bullish out here. Yeah, nothing wrong. Let me do some wave counting. See what that might look like out there. No, you don't get to wave number. Well, let's see. Let's do that secondary count out here. Let's try to find that low. There we go. What is it? Where are we at? Nah, looks pretty bullish. Other than going into support back here from March the 13th. Steve Rhodes from TFNN. Dow's off 305, S&P down 15. We'll be right back for the 2-minute wrap.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Earl's long inside the Russell 2000. The TNA is looking pretty good as we speak right now. I see there are a few questions that came in, guys and gals. They all arrived. I don't know if it's a file server issue or what have you, but all coming in right about 1:45 in the afternoon. So I'll go over those tomorrow because I've only got 2 minutes to go. But try to get those in as early as you possibly can. I love taking your cards and letters. I love going over specifically something that you are looking at. First, it makes the hour go just kind of breeze right by. Not that it's really a labor. It's a labor of love. But I do like to be able to share with you that which if you're going to spend the time to be here with me, I want to spend the time to be there with you. So I'll go ahead and get these requests, and we'll go take a look at them tomorrow. But back to Earl, if we take a look at the global flow of cash, of currency, which is really what it's all about, right? It's totally what it's all about. You take a look at the Russell 2000. I know there's some folks that are calling, and I've read a bunch of different things. People are calling for the Russell 2000 to just crash that it just topped out and it made a major high and all that stuff. I could not disagree with that conclusion more so than I do right now at the moment. One thing that you and I know, they don't know it, but you and I know it. When markets do top, they're going to top in all major currencies at the same time. The Russell 2000 in Great British Pounds is trading at another new all-time high. It's not that far away in the case of euros, a bit further to go in the case of yen, but you're at a new all-time high. This is not how markets end. The Russell 2000 has so much higher to go. And that's why the Russell $2,000 is really no big deal. Still may be some little counter trend rally out here, but if you just take a look at this chart out here and you just follow along and you're wondering why are these markets going higher? Whether it's lighter volume or whatever it is, it's because it's where capital is flowing. It's as simple as that. Folks, stay tuned. Your favorite polar bear, Coca-Cola's favorite polar bear, David White. He's up next. It's Tariff Tuesday. That means you got Tom O'Brien 3 to 5, Andy Heckman 5 to 6. I'll be back with you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.